we need to talk about some very big changes to the tax code that will affect all taxpayers in 2024. Tax brackets have changed, certain deductions have increased, there are new contribution limits for retirement accounts, HSAs, and so on. Then, if you earn business or 1099 income on top of that, there are even more changes that you need to know about, from how you write off your business miles, business vehicles, and the 20% business deduction. As a taxpayer, it is very important that you understand what is going on with these things, as it directly affects your pockets. So many people leave money on the table when they file their taxes, and this simply because they don't take full advantage of the rules and new changes like these to decrease their tax liability or increase their tax refund. And if that's you, don't worry. Just watch this video until the end and you will learn the latest and greatest opportunities to reduce your taxes in 2024. My name is Sherman the CPA, and I save taxpayers millions in taxes at mycpacoach.com. I share my real world experience here for free, so please help me out by liking this video and be sure to subscribe for more content just like this. Now let's go ahead and dive in. All right, so let's start with the tax changes that impact how your income is taxed, and then we will move on to deductions. So the first big change in 2024 are the new individual tax brackets. You can now get more money in at each tax bracket, which will result in lower taxes if your income is about the same. If none of that makes sense, just take a look at this example of how the 2024 tax brackets differ from 2023 for single taxpayers. As you can see, there are higher income thresholds for each tax bracket level in 2024 when compared to 23. Like, just take a look at the 12% tax bracket as an example. After about $45,000 in income, your income is taxed at 22% under the 2023 tax brackets. But with the 2024 tax bracket pushing the 12% income level to about $47,000, there's about $2,400 taxed at 12% instead of 22%, which means you would pay 10% less tax in this range. And that's just an example. You can get more money in at every tax bracket level in 2024, which simply means that more of your earned income will be taxed at a lower rate. But what about your investments? There have been similar increases in the capital gains tax rates. Now, if you do not know, a capital gain occurs when you sell an asset, like stocks, bonds, or real estate, for example. And it's when you sell it for more than what you paid for it. Now, if you only held the asset for less than 12 months, then it would be taxed as ordinary income, which would follow the exact same tax rates we just covered. And we do not want that. We want long-term capital gains tax rates, which happens when you hold the asset for greater than 12 months. And typically, these tax rates range from 0% to 20% depending on your income. And in 2024, the income threshold for each capital gains tax rate has increased to what you see here. So if your total income is under $47,000 as a single taxpayer or $94,000 as a married taxpayer, your capital gains tax will be taxed at 0%. Which is huge, okay? Otherwise, if your income is above this level, but less than about 500 grand, your long-term capital gains tax will be 15%, which is still not bad at all. Now, regardless of your income, remember that you can use tax deductions to lower the amount of income you report that is subject to taxes. I have worked with clients that earn hundreds of thousands of dollars in income, but are able to reduce their taxable income through deductions to fit it in these lower tax brackets. So let's switch gears and talk about some new changes to tax deductions in 2024. Now, the first big deduction change that most people will benefit from is the increase in the standard deduction. Every taxpayer has the option to take the standard deduction, which will instantly reduce the amount of income you have to pay taxes on. In 2024, the standard deduction has been increased to $14,600 for single taxpayers and $29,200 for married taxpayers filing jointly. This means that you will pay zero income tax on this amount of your income. So for example, if you are in a 32% tax bracket, the standard deduction would save you $4,600 in taxes if you are single, or $9,300 in taxes if you are married. 90% of taxpayers take the standard deduction, so this increase will likely benefit you. In rare cases, it may make sense to take the itemized deduction, but I will save that for another episode because that has not changed. Let's move on to another big change in a very popular tax reduction strategy, the increase in retirement contribution limits. Now, this is one of the easiest and most popular ways most people reduce their taxes. And this applies if you have an individual retirement account or IRA that you manage yourself, or a 401k plan through your business or your employer. So as of 2024, retirement contribution limits have been increased to $7,000 for individual retirement accounts, $23,000 for 401k plans, and $69,000 for self-employed 401k or SEP IRA plans. So if you are big about saving for retirement, make note of these limits and plan accordingly. There has also been an increase in HSA contribution limits. Now, if you do not know, an HSA simply stands for Health Savings Account. It is simply a savings account for health expenses. Now, you receive a tax deduction the moment you put money in your HSA up to the contribution limit. In 2024, the limit was increased to $4,150 for individuals and $8,300 for families, which is about a 7% increase from 2023. Also keep in mind that the money you put in your HSA can be used to pay for qualified health expenses. And when you do that, that money comes out tax-free to you. So you effectively could never pay taxes on the money you put inside your HSA. So those are the big changes in contribution limits. I personally love HSAs and retirement accounts because you can get a tax deduction from simply moving money to it. But there are even easier tax deductions available if you earn 1099 or business income, so let's talk about it. The biggest freebie tax deduction in 2024 for business owners is the QBI deduction, also stands for Qualified Business Income. The QBI deduction gives eligible taxpayers an automatic 20% deduction on all of their business income. Now, most business owners automatically qualify for this deduction if their individual income is below a certain threshold. And those income thresholds have increased in 2024. The limit was raised to about $192,000 for single taxpayers and about $384,000 for married taxpayers. So if your total income is lower than these levels and you earn business or 1099 income, you may be eligible for this deduction. But if your total income is above these levels, you may still qualify for the deduction, but there are additional rules and loops you have to jump through, so I will save that for another episode. Not much has changed there. But another big tax deduction change is the standard mileage rate, which has increased in 2024. So if you drive your car for any business purpose, you can receive a tax deduction based on the amount of miles you drive. And the standard mileage rate is what the deduction is based on. In 2024, the mileage rate was increased to 67 cents per mile. So if you drove 10,000 business miles, you would receive a $6,700 tax deduction under the standard mileage method. Though, if your actual vehicle expenses are greater than this, then the IRS also allows you to use the actual expense method instead, which actually leads me to the last big tax change: new bonus depreciation rates in 2024. So a few years ago, if you purchase an asset like a vehicle for your business, you could write off up to 100% of the cost in the first year under bonus depreciation rules. But that rule was only a temporary provision, and it has been phasing out each year starting in 2023. So in 2024, the bonus depreciation rate is supposed to be 60%. However, at the time of this video, there is a bill right now in Congress that will increase the rate back to 100% if approved, which will be huge for business owners. And for individuals, it will also increase the refundable portion of the child tax credit, which will put more money in millions of families' pockets. Now, the bill was recently passed in the House and has been sent to the Senate to vote on. I don't like to speculate on if it will or not, but if and when this goes into effect, I will be sure to post a video here. So be sure to subscribe to stay in the loop on the best ways to save on taxes. And by the way, if you need immediate assistance like right now, apply to work with one of my CPAs today at mycpacoach.com.